Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and it's Wednesday, February 11th. So for a while today, I watched the big bankers up on Capitol Hill being grilled by our congressmen and women, and I have to say that these bankers, these big guys, were cool as cucumbers. What I got from them is that it just didn't seem like they saw any sort of urgency to this problem. They seem to admit that there's a problem. They didn't make a big deal out of it. They almost seemed like they were up there on a social visit or like a convention with each other, talking about business as usual. Now, Congress people were, they had this urgency about all their questions and doomsday, and the world was coming to an end. But the bankers were pretty cool about it. That was my take on it. I thought there was a kind of a disconnect between what the Congress people were proposing was going on and actually the way the bankers reacted to it. So I thought it would be a calming effect on the markets, if not a positive effect. As a matter of fact, Mr. Mack, who runs Morgan Stanley, said on camera later on that he was not going to accept any more TARP funds, nor did he need them. And when each one of these CEOs of these big banks was asked about how their bank was doing, all of them said they were fine. They had plenty of cash. Bank of America guy said they had plenty of cash. They're making loans. So, I was scratching my head as to, is there a problem or isn't there a problem? I wonder. But I have to say, I thought the bankers did a pretty good job of calming markets and maybe even, putting a little optimism into some of the investors' thinking. So let's get to the market. Okay. I was looking for a rally today, closed up 50-ish points, but actually what we've done is we've built a nice little hourly base that we're going to, continue to rally out of this area. So I was quite pleased with the action today. I'd rather not see them run back up 200 or 300 points, but there was some backing and filling most of the day. And I was pleased with the way they closed. So I think there's more to come on the upside, so we'll see tomorrow. So, without further ado, let's go take a look at some of the major indexes, and we'll see how the charts look. Okay, a daily bar chart of the Dow Jones, and this is today's action. Closed almost on the high of the day, but not quite. I like the way it looks, although you may say, well, it's just a little, a little bar sitting there. What kind of meaning can it have? Well, I want to turn this into an hourly chart, and I want to show you all the work that it did today. And yesterday we made our low here. This is basically where they got to yesterday. And today we've spent this backing and fillings, and we're building this pattern that looks similar to this pattern. It's almost the opposite of this pattern. So now you've got this back and forth, back and forth, back and forth. And we may do it for a few more hours tomorrow, but then I think they break out on the upside and they get back up into this area again. So this is the pattern that I'm encouraged by with the Dow. Back to a daily. So sometimes you need to look at them on an hourly basis to kind of get sort of a microscopic look at what's going on. Okay, Russell 2000 closed up 2 points. Also has a similar look. Did not even get down to the support area. Stronger looking than the Dow, definitely. And I'm also expecting this to rally back up, tomorrow. This also looks like a little bit of a reversal day. New low and almost a close on the high.
but we'll need that follow through tomorrow. And here's the standard, the SPY, which is basically the Standard & Poor's 500. This is our critical support area, and you can see we held above it again and closed up 49 cents only. But you know, the fact that the market had basically stopped going down after yesterday's clobbering speaks well. You know, I thought the market was overdone yesterday. As a matter of fact, that was the heading of my video, overdone. And like I said on the video yesterday, when you know the reason for the market move, it discounts it. So it basically takes the sting out of it. When you need to be careful is when you don't know the reason. But we clearly knew the reason for the big sell-off yesterday. Okay, here we have the QQQQs, which is the Nasdaq, basically the Nasdaq market, and this is the strongest of all the indexes, and we still have this this uptrend intact here, and we didn't even come down and touch this low. Now this did not close up on the day, but you know, this has a lot more real estate to fool around with than the Dow does, because it's, you know, it just acts so much better than the Dow. Anyway, still has this up channel working, and you know, it still looks like there's a very good possibility that we're going to get to this. We're going to get to that resistance area, and getting through this is going to be key. I think on the next push up, we'll have a good chance of getting through this all high. This is basically what stopped us, you know, yesterday, the day before yesterday, was this high. You can see where we got to it, and then we pulled back into the support area again. But I think the next time up, we should be able to get through that. So maybe within the next day or two that could happen. So that's my view of the market. Until tomorrow, this is TK signing off.